Good evening, everyone, and welcome to our Launch Credit Union Credit Score webinar. We are very happy that you all registered and joined us. We have held many of these credit score webinars in person at our branches, and I'm sure some of you out there have attended some of these. But of course, due to COVID, we decided to take these virtual so that you can still get the same great information, but in the comfort and safety of your living room or wherever you may be watching us. So just a few housekeeping things. Everyone is muted, but we encourage questions. So please use the chat box feature or the questions box off to the side of your screen to let us know any questions that you may have. If you're not familiar with the chat or the question box, it's a box off to the side where you can see the presenters probably, or if we may be up above. But you can just type in your questions and we will either try to answer them along the way, or we may hold off until the end of the webinar to answer them. One thing is on an iPad, you may see like a question mark at the top of your screen, and that's where you would press and type in your question for us. As a reminder though, please do not include any personal information like your account number or your social security number in any of the chat questions. So now our presenters would like to introduce themselves. First, I'll introduce myself. My name is Kelly Haskins. I am the Vice President of Marketing, and I've been with Launch for 14 years now. I'm a proud graduate of UCF, Go Knights. I have a great team of marketing professionals who work with me here at Launch. Our job is to make sure our members know what kind of products and services that we have that may help them most. Plus, we're always looking for new members, and bottom line, we're here to save our members money. So if you're not a member already, we invite you to open your account with us either at any of our branches. You can register to make an appointment online. We do have virtual appointments too, or you can open your account online from our website at launchcu.com. We also have Dan Onifree. He is our Vice President of Consumer Lending here at Launch, and he has more than 30 years experience in the lending field. He says he was only 9 when he started, so I'm not sure if that's possible, but we'll give him that. And his goal and his team's goal is to help our members achieve their personal financial goals. Sherry Chamberlain is also joining us as a presenter, and Sherry is new to our credit union as Vice President of Collections, but she's not new to her field. She does have 20 years of experience in banking and collections, and she has a wealth of knowledge to help our members in lending. And how to improve or correct their credit score. So she'll be speaking today too. And behind the scenes, we have Emily Thornburg and Carly helping with our polls and our questions and video. So now that you know who all of our presenters are, let's get started with our first poll. So if you can pop that poll up, what you just need to do is take a look at the poll, choose your answer. We want to know just how many of you are members or non-members with us. So you can just click on yes or not yet. We'll give you a couple seconds to answer. And are we finished with our poll? Hope everybody had a chance to answer.
We're at 93%. I'll close it out.
Okay. So it looks like everyone, wow, everyone attending is a member with us. So we really do truly appreciate you being a member with us and joining us today. And now we do have one more poll question. And the question is, do you know what your credit score is? Have you checked that lately? We'll give you a few minutes, a few seconds to answer that. Just go ahead and click on one of those circles. I know, credit score is really important. It's important in many areas. And So we have 67% say that they do know their credit score, 25% that you don't know exactly, but that's okay. Interesting. So knowing your credit score is really important, and there are many ways to get your credit score. Dan, now is a great time for you to take over, let our audience know just what a credit score is and everything else. So Dan, take it away.
Yes, hi, good afternoon, everyone, and thank you, Kelly, for being very kind to me there. But I was actually 8 when I started, so I just want to make sure we set the record clear here. But yeah, my name is Dan. I'm the Vice President of Consumer Lending here for Launch Credit Union. And I've been here for about 4.5 years now. I moved down here from New York a little over 5 years ago. Go Bills. And I got into this business, out of college, really. And I'll be honest with you, I got into this business because I needed a job. But really, I stayed in this business over the years, over time, because I really just enjoy what I do. I really do. I love helping our members. It's all about, helping our members with their financial needs and just improving everything, and just giving you guys a lot of knowledge and a lot of information just to help you guys. And it's really rewarding to me. And I guarantee you, if you asked a lot of our employees here at the credit union, they would probably be responding the same way. But let's dive into it. We're here today to talk about credit scores and credit reports. We're going to give you a lot of good information. We're going to talk to you about what a credit score is. We're going to give you a breakdown about how a credit score is made and what makes up your credit score. We're going to give you a lot of tips along the way as well about how you can improve your score. And towards the end of our presentation, we're also going to even talk to you about, if there are errors on your credit report, how you can go about fixing things and getting things removed that should not be on there. So stay tuned. We got a lot of valuable information for you today. And again, like Kelly mentioned, if you do have questions along the way, don't hesitate, reach out, just type them into the chat box, and we'll do the best we can to answer as many questions as we can for everyone. But credit score, what is a credit score? We talk about, and everybody talks about credit score. You also hear the word FICO score. Credit score, FICO score, are they the same? Let me explain it this way, okay? Yeah, your credit score. A FICO score is what I think everybody commonly says, or what they say about their credit score. But the FICO score is really the model that is used. It's a type of credit score. There are other models out there besides FICO, but FICO is just the most commonly used scoring model in the industry that I think just everybody has adapted to that term, and we just call it our FICO score. It's kind of like a tissue and a Kleenex. Nobody really, I wouldn't say nobody, but we all say, hey, give me a Kleenex, but we're really asking for a tissue. It's the same thing. FICO score is the same thing. It's just the commonly used term throughout the industry that everybody is really adapted to, okay? But what is a credit score, okay? It's your report card, okay? It's your credit report card. It's your credit resume. It's letting lenders know what your credit worthiness is and your ability to pay back on loans. But, credit scores, it's not just about loans and lending. If you're going for a job, your potential employer, they're going to be pulling your credit score. So it's important. That's another reason why it's important to have a good credit score. If you're going for auto insurance, if you're shopping around for auto insurance, it may impact whether or not you get approved for insurance, or if you do get approved for insurance, it may impact the amount that you have to pay, the amount of premium that you pay. A better credit score, you'd be looked at as a lower risk type of applicant. So, you're going to get a better rate and you'll pay less. A lower credit score, you'll probably wind up paying more with your insurance. If you're young and you're going out and trying to get an apartment, apartment complexes, they're going to look at your credit score as well. So it's not just about loans and lending. There's a lot of other things, in life that, where credit scores are important. And it's important to make sure you have a good credit score. So let's dig in a little bit more with your credit score. What does it take to get a good credit score? It takes one trade line with a payment history of 6 months. What's a trade line though? Let's step back. Let's make sure everybody understands what a trade line is, okay? Basically, a trade line is one of your debts that appears on your credit report. So if you have, your auto loan or a credit card here at launch, we're going to report you to the credit bureaus, and that's going to be a trade line on your credit report. If you have an Amex credit card or a mortgage with whoever, they all report, and that'll be another trade line. So that's what a trade line is, just all your different loans that exist and show up on your credit report. But again, if you have no credit score, all it takes is just one trade line, and it has to be open for approximately 6 months, and you'll get a credit score. What credit score you'll get, it's kind of hard to see. I guess over the years, I probably would say people that haven't had credit scores and they get their first trade line, they usually start out in the low to mid 600s. Have I seen higher? Yes, I've seen people start out with a 700 right away. I've even seen people start out a little bit lower than that. It's hard to say. It all depends on the type of product, the type of loan that you took out. That's going to have the impact on your initial score once you get your score, okay? But benefits, here on the slide, these next couple of slides, it talks about some of the benefits of having a good credit score. Of course, getting approved for loans, getting approved for mortgages, that's going to be a benefit. We've also talked about a few other things. Again, if you're going for a job, think about it. If you're going for a job and it's between you and one other person, and you have a very good credit score, and the other person that's going up against you doesn't have such a great credit score, that may be the deciding factor. So again, there's a lot of benefits. Again, insurance, going for an apartment, lots of things. And then when you're going for mortgages too, if you're going for a mortgage, you're trying to apply for a mortgage, there are minimum credit scores that you need to have. So you may need, and I've seen anywhere from 620 to 680 and above as far as a minimum credit score in order to qualify for a mortgage. So very important to make sure that you have a high credit score, and those are some of the benefits there. So what makes up your credit score? Okay, I'm going to spend a lot of time on this section because I want to make sure everybody gets a lot out of this and make sure everybody understands what this is all about, okay? You have payment history, that makes up 35%, and you have capacity, which is 30%. Those are your two biggies right there. Now you have your other three, which is your age of credit, new credit, and types of credit. They make up about 35% combined between the three of them. They're important, but they're more smaller potatoes. The first two are the major ones, and we'll spend a majority of the time on these two, okay? So let's dig into the next slide and dig in a little bit deeper, okay? So credit score, payment history, okay? 35%, that's a lot. That's, and it's really all about just paying your bills on time. If you're paying all your bills, if you're not having public records, bankruptcies, foreclosures, things like that, keeping everything current, you're going to get the most points possible in this one particular category, okay? And again, this is 35%, it's a big one. It's self-explanatory, pay your bills on time, and you're going to get most points you can possible, okay? And then when you go into this next slide with capacity, okay, what we're talking about here, this has to do really about all of your revolving debt, okay? Majority of what we're talking about here is your credit cards, but revolving debt, again, You also have home equity line of credits and unsecured line of credits. They also fall into this category. But for today's, seminar, we'll just really keep it to credit cards. We'll just make it easy for you. But let's dig in a little bit deeper here and really explain what capacity does for you. Go back to that last slide. So capacity, let me explain that, okay? And how it impacts your credit score. Let's say you have one credit card in your wallet, okay? And that particular credit card, you have a $10,000 limit on it, okay? And you have a $5,000 balance on that credit card. Your capacity is 50%, okay? $5,000 balance to a $10,000 limit, 50%, okay? Now, with each percent of capacity that you have, it's 1 point on your credit score or on your FICO score, however you want to word it. So again, 1% for each percent of capacity. So let's use that example, okay? A $10,000 limit and a $5,000 balance. Let's just say your credit score is a 650, okay? And now you go and you pay off that credit card that you have, okay? So you have a zero balance now with a limit of 10,000. So now your capacity goes from 50% to 100%, okay? So you should expect to see probably in the next 30 days, your credit score increase by approximately 50 points. You'll go from 650 right up to around the 700 range, give or take. Now, I know back in that first poll that Kelly put up there about, do you know your credit score? If I answered that question, I probably would answer the third choice. I know where I should be, but I don't know my exact score. And the reason why I would probably answer it that way is because of what I'm talking about right here. Your score can change every single month depending on how you utilize your credit cards, okay? So again, if I have a 650 score, and for whatever reason, I took the money out of my savings or wherever I came up with money and I paid off my credit card, my score in 30 days could go back up to a 700. Now, let's say 2 months go by and I have a couple of unexpected expenses. I have to make some car repairs. So I take my car into the shop and I put $2,000 on my credit card. Now my capacity has changed. Now I have a $10,000 limit, but now my balance is 2,000. So my capacity has changed. I would expect to see my credit score drop by about 20 points because my capacity went down by 20 points. So you can see how your credit score can go up and down from month to month. Okay. Let's go into the next slide here. So age of credit, okay? What we're talking about here is how long you've had your credit cards open for, okay? And let me explain it this way. Let's just say I have one credit card in my wallet again, and I've had that credit card open for about 15 years. My age of credit or my revolving credit, my age is 15 years. Now, if I go and I open up a credit card, now I have two credit cards in my wallet. I have one credit card that's brand spanking new, and I have my other card that I've had for 15 years. But now you average them together, and now my age of credit has just been cut in half to about 7.5 years. And if you and as you keep on adding more credit cards to your portfolio, that's what this part of the breakdown is. It's affecting your age of credit and how the scoring model makes up your credit score. It's okay to get new credit cards. It's fine. You just want to make sure you know where you are in your in life. I mean, are you going? Do you know if you're going to be looking to, purchase a car in the next 6 to 12 months? Are you going to be purchasing a home in the next 6 to 12 months? So one thing you don't want to do is be adding on more credit cards because things like that will bring your score down. Okay. Carly, let's let's see if we have any questions from the audience before we move on.
Okay, I do have one. What's the best way to get out of credit card debt?
Give me a tough one right off the bat. Thanks, Carly. So getting out of credit card debt, there's a couple of ways you can do that. Okay. If you're a homeowner, one thing you could do is you could look at always refinancing your home if you have equity in your property. But you want to be cautious there because again, your goal in life is to pay your mortgage off. But at the same time, if you're not in the position financially where you can save and pay off your credit cards, it may be something to think about where you look at refinancing and paying off your credit card. So it has to do with you. It's not everybody is the same. Okay. And again, with the way the rates are today, if this is a situation or a position that may benefit and work for you, it may be the best time to do something like this. You can also look at an installment loan. We do offer installment loans and debt consolidation loans. A lot of financial companies do that also, where we can take all your credit card debt and we can move it into an installment loan. That does a couple things for you. Now, what that'll do, first of all, it'll put it all into one loan, make it one easy payment for you. And the other thing it also does for you, think about it, it takes that revolving debt, all that revolving debt that you have, and it moves it in there and it frees up your credit card capacity. So by doing that, that's another way to increase your credit score. But let's just say you don't want to use loans to get yourself out of credit card debt. My suggestion with this would be tackle your lowest balance credit cards first. I guess it's called the Snowball program, where let's just say you have about 4 or 5 credit cards and your balances range from 1,000 to 5,000 and up or whatever. Keep paying the minimum payments on the larger ones, and then your lowest balance credit card, put as much as you can on that, according to whatever you can afford with your budget, and try to get that credit card paid off first. And then once that's paid off, then you tackle the next one and then the next one. Because after you paid off the first one, then you could use all the money that you were paying every single month and you could add that to the next card and so on. And that's why they call it a snowball program. It's effective. And again, if you have questions about things like that, always come in and talk to one of our representatives. We're here to help you. We're here to guide you through this. We're here for you for the long haul. It's not just about today. It's about, it's about life and taking care of you all the way down the road. So, I think it's time to take a break now and take a look at a video that we have for you. It's definitely a very powerful video. And it gives you a lot of information about things that you may not have known about credit. All right, I'm back. All right, so some good information there in that video. Let's get back to the last two parts of what makes up your credit score. Go back to one. So the first one on the right, types of credit. These, and again, this is only 10%, and there's really nothing you can do here. It's not like you could just throw loans on your credit report. Time heals this, and time will improve this part of your of what makes up your credit score. As you grow with your credit, as you add new trade lines over years, as you eventually purchase a home and you have a mortgage on your credit, and you purchase automobiles and they'll show up on your credit report. Over time, this also will help in this part of it also. The other one on the left, new credit, that's another smaller one, small part of what makes up your credit score, but it's important also. 10%, it definitely has an impact. Probably the easiest way to explain this, let's go 2 slides ahead, okay?
Sorry about that. It completely just went to the very end.
Okay. Next one. One more. Go ahead, one more slide ahead. Okay. So, nope, now go back. Now go back. There you go, right here. Okay, so new credit, okay? Probably the easiest way to explain this, I always love using examples, so let me do it that way. So let's say I have a 650 credit score, okay? It's the holidays, and I go to Kohl's and I'm looking to buy something for my wife or my daughter. I go up to the register and the cashier says to me, "Hey, would you like to apply for a credit card? We could put your purchase right on your credit card today if you qualify." And I say, "Sure, why not? Go right ahead." Okay. So what happens? They run my credit. There you go. There's 5 points off my score. So now I went from a 650 to a 645. Okay. Now, if I got approved for that credit card, there's another 10 points off my credit score. Now, let's say I do this at another place. I did Kohl's. Now I go to JCPenney's. Now I got another 5 points off from that store, and I get another 10 points off because I got another card at that place. I take out 2 new cards during the holidays and I could lose 30 points right off the bat. Now, you also have to think of another thing. Now, I went in there with the intentions of using the cash in my debit card in my checking account to pay. But again, the cashiers were like, "Hey, see if we can get you to qualify and we can use your credit card." So I went ahead and did that. So now that also could affect my capacity because again, I was approved for credit cards and I put the purchases right on my credit cards. I could lose more points that way. So I could have a 650 credit score, go apply for 2 credit cards and walk out with maybe a 600 after these 2 credit cards hit my credit report. Now, yeah, I saved 10% at the register. That's how they get you. Hey, sign up for a credit card, we'll take 10% off. So maybe I saved 20 or 30 bucks for each place that I got the credit card. But now 3-4 months later, I go for a car loan and I still have a 600 credit score. I don't have that 650. And instead of getting a 4 or 5% rate, they offer me a 9% rate. And that could affect me by thousands of dollars. So yeah, I may have saved $30, $40, $50 at the register, but that's going to impact me so much more because I'll be paying thousands of dollars more because my credit score was hurt, just because I opened up a couple of trade lines. And let's talk a little bit more about what impacts your scores. Go back one more slide. So here we have bankruptcies, foreclosures, short sales, repossessions. You can see how all these impact your credit score. And trust me, we understand things happen in life, obstacles happen. We understand that. The credit reporting models, they understand that. So when things happen, it's not for life. You can rebound. You can definitely rebound and get out of this. and you can repair your credit score. Let's go 2 slides ahead and I can kind of show you how that works. So this slide here, it talks about what I call the 40-30-20-10 rule, okay? So if I had a foreclosure or a bankruptcy or whatever happened to me that impacted my credit score, after 1 year goes by, 40% of the impact that that event had on my credit score that caused my credit score to fall will go away, and then your credit will already start to heal, okay? And another year goes by, another 30% will start to heal with your credit score. So you could see time heals everything. Another year goes by. Now you're looking at 90% of the impact that your score took from that event is already gone away. So, and trust me, I've done this with a lot of members over my career where maybe they've had some events like this happen where they had to file bankruptcy. It happens, trust me. But there's a way to get your credit score back probably within 18 to 24 months where we can get you right back up to a 700 credit score. We have credit rebuilding programs. We have ways to help you. It's not difficult. You know, come in, talk to one of our representatives, one of our loan officers, and we can definitely guide you through that and put you on a plan. Okay. These last couple of slides, these are just some more tips, things that I've kind of already talked about, things that will help rebuild and build your credit score and help you pay less. You can move forward into the next slide. So again, like what we talked about, pay your bills on time. You know, keep everything current. That's going to give you the most points in that one category. Again, it had 35% impact on your credit score. Pay your bills on time and you're going to get the most points. 30% to 35% is where usually you see a lot of like the Credit Karmas and Credit Sesames and recommendations of where you want to keep your balances at to have the best credit score. I'll be honest with you, if you can, you keep it at 0. I mean, I went over my formula before. For each percent of capacity is a point on your credit score. So if you have the ability to have no credit card debt, that's how you have the best score in that category. Don't borrow more than you need. I mean, you know, self-explanatory, only borrow what you need. Keep going on to the next one. Closing out credit cards and moving revolving debt to installment loan. That's a good question. You know, when should you close credit cards out, or should you close credit cards out? It's always a hot topic, hot question. You know, here's my recommendation. Okay, you have a couple of categories where credit cards, when you're closing credit cards, it could impact your credit score. You know, if you have still a lot of balances out there on your credit cards, it might not be wise to close your credit cards at this point in time because that's going to affect your capacity. Again, if you have about 5 or 6 credit cards in your wallet and you add up all your limits and it adds up to about 10,000 and you have $7,000 in balances, you don't have a lot of capacity, but at least you have a little bit of capacity there. But if you go and you close your credit cards while you still have balances, you may eliminate any capacity that you have. You may drop your limits from 10,000 down to 7,000 while you still have $7,000 in balances. You just eliminated all your capacity by closing your credit cards out while you still have balances. My best recommendation is wait till you get your credit cards paid off. And then what you want to do is you don't want to close your oldest credit cards. You want to close the ones that you may have just taken out during the holidays. Because again, that had the impact on that one category about your age of credit. But again, if you ever have any questions regarding, you know, what you should close and why you would close and how it may impact, again, you know, set up an appointment, come in and talk to us. We'd be more than happy to go over this and give you a lot of good information about not only just this, about other things that we can do to help you build your credit. And I think this moves us into our next poll. And then after that, I'm going to be turning it over to Sherry, who will finish up our presentation. And then we can see if we can take some more questions from everyone. But if everybody can go ahead and answer, have you ever had to dispute an error on your credit report? How are we doing with the polls? Looks like we're perfect. Ah, very interesting. So it's kind of like right in the middle there, 50-50. So fantastic. So let me do this. I'm going to turn the presentation over to Sherry. Sherry, go ahead and take it away.
Thank you, Dan. I appreciate that. Dan has done a wonderful job going over everything on how you build that good credit score. But let's continue. How do you dispute something on your credit report? The best way would be to go to Experian or Equifax. Both of those are the titans of the industry. Those are the industry definitely leaders. It is a very simple process. Log on to the website. You can also actually do this by phone or regular mail. I would recommend this. Be very specific in the error that you're questioning. If there's something that don't belong there, explain why. Maybe the name is spelled differently. Point out the differences. If you have any supporting documentation, such as canceled checks, statements, anything that will help you dispute the claim, will be sent to the creditor. When we receive them here at launch, it is through the collections department, and we will investigate each and every one that we receive. And when there's supporting document, that really helps get a good resolution on that, rather than don't be very generic on the situation. Get as specific as possible. If it doesn't belong there, let them know. And then also expect an answer. Generally, we have to answer it within 30 days, but you can also expect an answer around that time frame. Most financial institutions take this very seriously. We report each member accurately, continuously, so it's something that we can answer quickly, and it is our duty to answer these and resolve these issues as quickly as possible. Now, we get asked this question all the time regarding credit repair companies. This is my advice. While some have some merit, there's a lot of disreputable companies out there. Do your research. A simple online search, if you know anybody that's used some of them, take their advice, see what their experience was it resolved? But as a reminder, the credit repair companies can generally not do anything that you yourself could not do, and obviously do it for a lot less money. So that is extremely helpful. A lot of the credit repair companies, do your research on that to make sure that they're reputable and they can achieve results. But also remember this, legally, financial institutions cannot remove accurate information. So always keep that in mind. If it is a legitimate discrepancy, by all means pursue it by all means possible to straighten out your credit. And then another commonly question that we have is the Credit Karma and companies like that. Now, Credit Karma uses the Vantage Score 3.0. You have the Vantage Score 3.0, and you also have the FICO. Now, most financial institutions will use the FICO score, but for those who have Credit Karma or similar services like that, the Vantage Score is slightly different. They're a little bit more forgiving on certain collection accounts. If an account is only reported to one bureau, they will pretty much discard it. And then also they're a lot more forgiving on medical collections. So if you have substantial medical collections, your Vantage score might be a little bit higher, but they both use very similar scoring systems. Numerical, generally between 350 and 850, somewhere around that, but their methodologies are slightly different. And your credit score at FICO might be a little bit lower than it would be on Vantage, but there's always going to be that. And as Dan explained, it is a juggling act with your credit score. I mean, if you had a little overzealous holidays, you might drop a little bit. The one thing, if you do subscribe to any credit monitoring things, look for a significant drop in your score suddenly. If you see something that perhaps is 40, 50 points down, investigate it. Worst case scenario, you say, oh yeah, I opened up that account with Kohl's and I ran it up a little bit. So that affected me in this ways. And remember that most credit events, like Dan had pointed out, when you open that quick account at Kohl's to save your 10%, it changed your capacity levels. It changed not just opening up a new account. It also just changed the way everything was sort of calculated on that. So always keep that in mind. If you see a sudden drop, once again, I highly recommend that you investigate it.
Sorry to cut in. I apologize. The screen, your last slide was cut off slightly. So hopefully everything is good now.
Yes. Can we go to the chart with the breakdown of the rates versus the credit scores? There we go. Okay. Now this is a simple example on a $20,000 loan. And a $20,000 loan, think of it as an automobile loan, but however, let's face it, most automobile loans nowadays are significantly more than 20 grand. This is based on a term of all 60 months, but we're showing you what the rate could be with different scores. If you look at what we would call grade A credit, a score of 730 plus, you're looking at 295 at a payment of 359 a month. Then let's go to somebody who's right around a 635, which is maybe slightly below average, but still a common occurrence. Their rate would be 1195, and their payment would be practically $445 a month. Now that's the difference between the two is $85 a month. That's $85 a month for 5 years. So over the life of the loan, you're looking at, north of $5,000, which is a significant amount. And this is on a low amount. This is on $20,000. What if it was a $35,000 vehicle? Then you're looking at that doubled. So this is always to keep in mind. To keep your credit in check is a great idea. Over the long run, you will save significantly. And anytime you have questions on your credit, you can always make an appointment, online or at one of our local branches, and we'll be helpful and talk to you and see how we can improve your credit score, especially if you're looking to make a large purchase in the next year or so. Don't wait until the last minute to investigate your credit and see if there are any errors, because this stuff does take time. So if you are looking to make a major purchase, start 6 or 8 months or even a year out, and really go down that path and get your ducks in a row so that the loan goes smoothly at the time you're ready to purchase. All right, next slide. Oh, these are two big ones. These can really significantly impact a person, especially with good credit, because if somebody's asking you to co-sign a loan, most likely you're in the upper echelon of the credit, and this can affect your ability to get a loan in the future for yourself. For example, if you're buying or co-signing on a loan for a vehicle for someone, what if you need to go buy a vehicle a year later? Well, now you're showing 2 car payments, and that's going to go against you, because co-signing a loan is pretty much co-owning it. There is no designation. You are responsible for that payment just as the other person is. It will go against you, and it's something you really need to think long and hard about, whether you really want to co-sign a loan. If you do, I would recommend that you monitor the loan yourself so that you're not caught off guard when someone from collections calls you and lets you know the loan is in default. and meanwhile your credit's already taking several hits. I would recommend monitoring the loan, whether you can do it online or something like that, so you're not caught off guard. But be very, very cautious about anyone that you would co-sign a loan for. And then agreeing to be an authorized user. This is, you know, something that generally, I mean, I've myself done. I've done it for my kids. When they went off to college, I'll give them a card that they can sign, but it shows up on their credit report. So if, and this is for the authorized user, if they're going to be an authorized user, they need to be aware of the consequences of being an authorized user on that account. It will show up on their credit report, and it is very important that they monitor their credit to make sure it's being reported correctly and that it's being reported as an authorized user, which means they are not responsible for the debt, but as an authorized user only, so that if they were to go for a loan, that debt wouldn't count against them towards with the ability to repay, that this debt would be counted under them. Also, I mean, they could suffer the consequences should the person who owns the credit card actually would default on the credit card. So it's very important that this be reported correctly as an authorized user and an authorized user only. Next slide. Oh, obtaining your credit report. I would recommend that everybody, you know, take note of this. You are entitled to one free copy of your credit report every 12 months from each of the three reporting agencies. The most commonly used is going to be Equifax and Experian. They are the titans of the industry for sure. They will not put a credit score on there, but at least you can go through it line by line and see if there's any discrepancies. Even check the balances, the date opened, last reported. Make sure they're still reporting. I've seen some, you know, for whatever reason, stop reporting a year ago. So it's just sort of hanging out there. So make sure, go over it line by line. If you needed assistance, you're more than welcome to make an appointment here at launch, and we'll gladly go over it with you to see if there are any issues. And then you can order online. You can order at annualcreditreport.com and also at that phone number that's listed, annualcreditreport.com. Make sure you go to the proper website, because there's a lot of fake websites out there. And especially when you are providing your name, address, social security number, date of birth. Those are some highly sought after information. So keep it close. Make sure you're at the good website, the proper website. So I would recommend, you know, keeping this webinar handy so you can refer to it. Also, I have one other piece of advice that is probably one of the most common mistakes that people make when asking for credit markers to be removed. It is commonly their address. They move and they don't tell their creditors. And then all of a sudden, a credit card, a loan, something winds up over 30 days late. And there's really not much you can do about it. So always make sure your creditors have your address. Generally, you can go to their website and update it. But I've seen a lot of credit report errors that were just simple mistakes. They moved and they didn't change their address with Macy's or Amex or somebody, or the mail didn't reach them. So make sure you update your address. And then also, I would recommend that you open up mail from any of your creditors, so that in case they're changing their address, because one of my creditors recently changed the address that we're mailing payments to. And I know it caused some issues, and you have to make sure you update it in your bank's bill pay system. So that's just a little side note, little word of advice. It's been a pleasure talking to everybody, and please come see us. We'll gladly review your credit report with you. If you have any questions or have any specific questions that you want to answer that are more personal in nature, feel free to reach out to us. And I believe Kelly's gonna finish us out here.
Actually, we have a few questions that came in. Someone asked, did we go over this question already? Should you pay off your credit cards the day you charge something on them, or should you wait and pay them off when you get the invoices? Which is better for your credit?
I can take that one, Kelly. You know, I do that actually with my wife. I use, the rewards cards, but I don't like using credit cards. I'd rather use my checking account. But if I am going to use a rewards card, I'll pay them off immediately. There's no reason to wait for your statement. I'd rather have the money come out of my checking account because really the intent is to pay with my cash. But if I want to take advantage of the rewards, yeah, sure, I'll go ahead. I'll use my reward cards. Then I go ahead, I text my wife and she makes the payment for me. She kind of handles the finances for me in the house, just the way we have it structured. But yeah, no, but if you do it either way, it doesn't have any impact because again, if you wait for the statement to come, you're not going to pay any interest because again, if you pay off on what you charge within that period, that billing cycle, you don't pay interest. So whether you pay it off right away, the day you charged it, or 30 days from today when you get your invoice and pay it, it doesn't make a difference. I like to have it out of my checking account. I like to just make sure it's paid for so it's accounted for. That's just me though. Whatever works best for you, that's what I would recommend. But again, no difference.
Perfect. Another question came in. Is there a certain number minimum or maximum of credit cards a person should have? Does the number you have affect your credit score?
I'll start with that one, Dan.
Yeah.
It goes back to really Dan's presentation, and it's going to have to do with capacity. That's going to be all those factors come into play. Is there a minimum number or a maximum number? No. But capacity and all those things are going to come into play. It's a juggling act.
Absolutely. And as you continue to add on more and more credit cards, again, you're not allowing your age of credit cards to develop. You want to let time, go on. My recommendation is once you have 1 or 2 or 3 credit cards, that's all you really need. I mean, have your favorite store cards, the ones that you utilize to get your benefits, have your major credit cards where you can go out and do your major purchases and things like that. But there's no reason to continue to add on and add on and add on because that's really not the best thing for your credit score. Have a few, over time, slowly build your credit. But once you have a few credit cards and, that's it. You really don't need to keep building because it won't benefit you. It'll actually make it worse.
Okay, and this kind of goes in line with that. Should I close an old account that I don't use?
An old credit card that you don't use, kind of like I kind of answered that before, but again, if you're not using it but you still have balances, again, that could affect your capacity. So keep that in mind if you're making a decision about closing credit cards. Yeah, if you have no balances and it's an old credit card, and you don't use it, but again, that may be a powerful credit card. If that's one of your credit cards that you've had open for 7, 8, 9, 10 years, that's probably not one of the ones I'm going to close. I probably would leave that open. There are certain credit cards that I've had. I'll be honest with you. I have a few in my wallet. And, I have cards that I rarely ever use, but what I'll do is just once every 6 months or once a year, I'll just make a purchase just to make sure they don't close it out on me. I just want to make sure I keep those old credit cards, the ones that I've had around forever. I just want to make sure they stay intact because that's how I benefit from those cards because it helps my age of credit.
Okay.
Any more?
Emily, do you see any more questions out there?
Yes, we have a few more. If we have time, I can read some of them off as well.
Sure.
Okay. So we have one that says, does capacity mean used or unused credit?
Your capacity is really your availability, what you have available. So if you have a $10,000 limit and you have no balance, your capacity is 100%. So you have everything available. You have full capacity. If your limit is 10,000 but your balance is 10,000, you have nothing available. nothing available where you can charge on that credit card, your capacity is zero. And you just, and that's what's going to affect your cards the most, especially when you're maxed out. No good for your credit score. You got to stay away from maxing out your credit cards.
Okay, we had one that just came in and they're asking, can someone please repeat what it is that Credit Karma is used for again? She was trying to write down the information and missed that one.
Yeah, I mean, Credit Karma, there's a lot of these sites out there, Credit Karma, Credit Sesame, and kind of like what Sherry said, you know, I don't really worry about the credit score that Credit Karma gives me. Okay, I can go on Credit Karma, it tells me whatever, but what I look for is, I look at it once a month, okay? And if I'm not doing anything, if I'm not charging anything and everything is pretty much staying the same with my finances, my balances and everything, but all of a sudden I see a drop, then I'm going to start investigating. You know what I'm saying? If I'm normally a 700 and all of a sudden I'm a 620, what happened? You know, is there a dispute, something that shouldn't be on my credit report that I need to dispute? Is there an error? I mean, that's what you want to be utilizing Credit Karma for. Look for trends, look for things that change. And Credit Karma and Sesame, they also have a lot of good tools and a lot of good information out there as well, that they'll provide to you to help build your score as well. So take advantage of it, absolutely.
Okay, another one, I think this was asked by 2 people. Are secured cards a good option?
Yes.
Yeah, and
Yes, they can be to you know, initially get a credit card. Absolutely, it's a good way. I mean, we have that program here at Launch. It's a great credit building program or rebuilding program, however you want to look at it. Yeah, it can be a great starter tool. Absolutely, and it can get you into, you know, a traditional credit card. Rather than secured all the time, but it's a great way to start young people being responsible with their money and people trying to rebuild their credit. It's a great program.
And we have a lot of great questions coming in, so I will just keep going until our time is cut off. So I have a few more. I don't know if this one was already answered yet. If someone added you as a credit card, on their credit card as an authorized user without your consent, is there a way to remove yourself, or can only the account holder do that?
No, absolutely. You can have yourself removed. If you're added on as an authorized user, all you would have to do is call up that creditor, whoever, you know, whichever creditor has you as an authorized user, and you can ask them to remove you.
Okay. I don't know if this one was already answered. My credit score tanked last year because I closed a bunch of credit cards, paying them off, but how long will it take to increase to where I was previously?
That's a loaded question. There's probably a lot of different factors there. Now, you closed out a lot of credit cards. Do you still have balances on there? Did you close out some of your credit cards that you've had for a long period of time? So it really depends. There's a lot of things that probably impacted your score there. I would probably have to really look at your credit report and see what you did and see what's still left to really answer that question. But it really all depends on what you closed out and what you still have left as far as balances and things like that. Because again, if you close out credit cards and you have balances, it affects your capacity. And depending on which credit cards you closed out, it may affect your age of credit. So a lot of different factors there.
Okay, so I will just ask you guys about maybe 2 or 3 more questions.
Sure.
So we have someone saying that they know financial institutions use the FICO score. What does Credit Karma use? Do they also use the FICO score or something else?
Credit Karma uses the Vantage Score 3.0. Now, the Vantage Score is a little bit more forgiving on medical collections. If accounts are only reported to one bureau, it kind of discounts them. So they have, you know, a more liberal standard as far as, you know, what they'll accept. You know, medical collection using FICO is going to be a little bit more harder hit on your credit versus the Vantage Score, which is utilized by Credit Karma. So you might see a slight difference. You know, they're a little more forgiving.
throughout the years with, I've had the app for a while, and throughout the years, it's been funny. But for the most part, Credit Karma is always maybe 10, 15, 20 points higher than your normal FICO score that I would obtain. So if I'm like a 700, my FICO may be 680. But then, it's funny, I've seen it be the opposite for some people, but majority, again, Credit Karma tends to run a little bit higher.
Okay.
Okay, well, I am so sorry, but we are out of time. I know we probably need another 10 minutes for our next webinar on credit score, but we are at our time limit. Thank you guys so much for doing the presentation and answering all those great questions. And thank you to everyone who attended for chiming in with those great questions. I know they helped out a lot. So thank you for taking your time to join us. We will be hosting additional webinars in the future. So be sure to follow us on Facebook, Instagram, and LinkedIn for dates of future webinars. Or you can visit our website at launchcu.com. Our webinars are always listed on our calendar, so check that out anytime, okay? And you will be receiving a follow-up email from us with a link to this recorded webinar, so you can re-listen to it and share it also with your friends. Feel free to reach out to any of our lenders for any questions you may have concerning lending questions or credit scores questions. There is a survey at the end of this also when you close out, so please take a moment to share your feedback. We do appreciate it. Everyone, please stay safe, stay well. Thank you for attending, and have a great rest of the evening.